Ladies and gentlemen, it is a great pleasure to have you back here again and to welcome you on behalf of the Lord Mayor Petra Roth, who unfortunately is not able to welcome you personally due to a bereavement in her nearest family. This Congress is a special occasion as the European Banking Congress takes place for 20th time. We already saw it. It was in 1991, the time of Frankfurt's campaign for the European Central Bank, when the city of Frankfurt, the Deutsche Bank, the Dresdner Bank, and the Commerzbank established the first Frankfurt European Banking Congress. From the very beginning, the project was supported by the Deutsche Bundesbank and organized by the IBF. The Congress was and is a combined effort for important members of Frankfurt financial community to underline the role of our city as an international financial center. Some people may have thought, oh, just another Congress. But after the premiere, it showed that this meeting is more than just another Congress. In all these years, during different economic periods, the FEBC always was a forum to open and forward-oriented discussion of European issues, their roles in the world of politics and financial market. Ever since, it was a truly international Congress with first-class speakers and participants like Alan Greenspan, the former president of the Federal Reserve Bank of the United States, and a number of other leading politicians and bankers from all over the world. It was at the FEBC when the German Bundespräsident Horst Köhler warned the financial community not to repeat old mistakes which led to the financial and economic crisis we faced during the last years. I would like to thank very much all those who have contributed to the development of FEBC as a panelist, as speaker, as moderator, as organizer, or as guest within all these 20 years. I consider it a perfect match that our city, the financial center of Germany, is hosting this international Congress for such a long period. And I hope it will be as successful as in the past. This year's program, Beyond Crisis Management, promises some very interesting discussions with first-class speakers like the German Minister of Finance, Wolfgang Schäuble, or his colleague from Greece, and many others. There are a lot of topics to be discussed. As Vice Mayor of not an exactly large but big city, I know the challenges at levels of state are confronted with. All levels of state are confronted with. The German Minister of Finance, Wolfgang Schäuble, will give us an insight of his view and an assessment where we stand after the crisis. How to deal with the excessive national debt of some country. How will reducing this debt affect the fiscal policy and the economic development? These problems are not solved yet. Referring to Germany, economy recovered surprisingly well. This is not only, but also a result of the different economic stimulus packages which end next year. Therefore, some economists fear that the austerity plans, which are necessary, will cause a negative impact. The main concern is, that we still have not found the right measures to avoid a new crisis. The last years have shown that the traditional tools and rules do not solve the problems and do not achieve the results desired. As the president of the Deutsche Bundesbank, Axel Weber, recently said, we have to think in a new way far beyond the old borders. The most interesting and controversially discussed question is, to what extent should politics try to regulate financial markets? Consider the news It does not seem as if financial markets are already stable enough to solve their problems without any help from the states and the European Union. Just a few weeks ago, finance ministers and governors of the central banks agreed in Washington that the International Monetary Fund should take over a new, more active role in regulating the financial markets. Dominique Strauss-Kahn, the managing director of IMF, will introduce this topic after lunch. I believe a far better international surveillance and cooperation is necessary. In 2008, we met here and the financial world was close to collapse. Today, it seems we survived one crisis, some region better than others, but is there another one ahead? We haven't found the new financial architecture yet. Further questions which need to be answered are, which monetary policy is successful? How can we stabilize the Eurozone after having globalized the markets? How can responsibility be globalized? We must not forget that people all over the world depend physically and socially on economic integration. Therefore, any effort to answer these questions is vitally important. The last months have shown that cooperation between politics and the leaders of the financial and industrial cooperation is possibly worldwide. Now we have to take care that this cooperation holds on. Congresses like the EBC can play an important role in forwarding and deepening this discussion. Let me thank the organizers, especially Martin Blessing and his colleague Josef Ackermann. And I thank all the panelists for their contribution and cooperation. Last but not least, I want to thank you, the participants, for being here, and I wish you a successful Congress and a pleasant stay in our city. And now I want to give the word to the chairman of this year's Congress, Mr. Martin Blessing. Welcome, Mr. Blessing. Thank you.
Dear Ms. Ebeling, thank you very much for your warm welcome. I think we, as the organizers here, Deutsche Bank and us Commerzbank, are very honored that we can, together with the city, always since 20 years, have this great event here. Unfortunately, the French Finance Minister Lagarde, she will not be able to attend our conference due to the recent reshuffle in the French government. So the French seat in the panel will have to remain empty. And Olli Rehn yesterday informed us that he can't make it today. We can now all speculate what Mr. Rehn, as the EU Commissioner for the Currency, is doing today. But we are very happy that Thomas Miro, who is the chairman of the EBRD, will take his place here on the panel, and we will therefore have, I think, a very interesting debate here in our first panel. Excellencies, ladies and gentlemen, warm welcome to our 20th anniversary Congress here. My colleague, Josef Ackermann, is not able to attend today. Jürgen Fitschen, very well and deeply esteemed colleague, is taking his position today. So we are very happy that we together can share this event here today. And the anniversary of this Congress is, of course, a perfect opportunity to thank Mr. Malecki and the organizers of the EBC for over 2 decades of devotion in making this conference happen. And for those of you who don't know, Mr. Malecki's birthday was yesterday, and I think a great Congress today is the best birthday present to him. Thank you. Please allow me at this point one personal remark. It concerns the title of today's Congress. A year earlier, we have chosen Beyond Crisis Management. Today, however, I would prefer if we had made a question mark behind the title, because I'm not 100% sure that we already are out of the crisis. I think we still have to cope with the crisis that has developed from a financial market crisis to becoming a global recession, and now I think we move to a stage which is the crisis of government debt. It is now all the more important to discuss what has been done. In the financial and the banking sector, many measures have already been taken, and others have to be initiated. We certainly need more regulation to close loopholes and better regulation to get the incentives right. Financial market participants, including many banks, adjust to their business models to reflect the lessons learned from the crisis. But there are more challenges ahead. Priority number one now is to get the euro area weather-proofed. Let me say it right from the start. Any discussion on exit strategies from the euro lead into the wrong direction. It is an ideal and fruitless discussion which endangers the political foundations of the European Union. Instead, there are three top issues to make the euro area a union of stability. First, the independence of the European Central Bank. Second, the effectiveness of fiscal rules. Third, an adequate involvement of market discipline. Let me add some thoughts on what these issues entail. First, on central bank independence. So far, the ECB has done a fantastic job. This way, it continues the tradition of the Bundesbank. All the more important, it is to preserve the independence of the ECB. This is because inflation should never be a way out of too high debt, be it for private or public debtors. And therefore, we are, of course, very happy to have distinguished members of the ECB Council and President Trichet here today. Therefore, a few remarks on the second top issue, the effectiveness of fiscal rules. Long before the crisis, there have been many discussions in Europe on how to keep government debt in check. In particular, the Stability and Growth Pact carried a lot of hopes at the start of the euro. But as history proves, it was not able to prevent the current situation. Therefore, new ways have to be found to strengthen the Stability and Growth Pact. For instance, automatic sanctions that apply directly in the short term have been debated recently. But automatic sanctions require national governments to give up some of their sovereignty. And it seems that Europe is not ready for this. As such, we have to discuss a third top issue, market discipline. Certainly, in the future, risk premia should reflect risk better, also for government debt. Facing the risk of losses, investors would limit an excessive rise of government debt. Market discipline would be assured. To make this work, we need long-term crisis mechanism, including clear rules for restructuring debt in the European Monetary Union. All of these new rules, however, have to strike a fine balance. A, preserving the solidarity between the EU members on the one hand, and not allowing free riding and moral hazard on the other. And still structure all solutions in a way that investors are not scared off, because we need, of course, future investors to buy government debt also in the future. Getting this balance right is a worthwhile goal because, while I would not go so far as to say the euro is the only bond, but it does bind us together. As a consequence, there is no alternative to create the necessary political institutions and mechanisms. Whether we like it or not, we have to acknowledge that economic fundamentals create facts of their own. No matter how powerful the political will, economic reality eventually prevails. This also means, sooner or later, we have to accept a debate about deepening European integration and especially about a political union. Such a debate will have to include problematic subjects like fiscal federalism and even so controversial an issue as a transfer union. To sum up, there's still a lot of work ahead for two of these three top issues I mentioned, those concerning fiscal rules and market discipline. Still, we are lucky to already have an independent and successful central bank. For instance, the ECB does not have to meet a double target. In contrast to the Fed, the ECB is primarily responsible for price stability and not simultaneously for economic growth. And if you look at the numbers, it has done a fantastic job. So it's no wonder that the organizers of today's Congress decided to strictly separate monetary and fiscal policy issues by setting up two panels. This afternoon, Axel Weber, Paul Tucker, Charles Wipolski, and my colleague Jürgen Fitschen will discuss a new mandate for monetary and financial stability. Now, I have the pleasure to introduce to you the first panel and its participants. Mr. George Papa-Konstantinou, the Greek Minister of Finance, is here today, and we very well welcome him here. Secondly, Thomas Miro, the head of the EBRD, will join us on the panel, and Daniel Gross, director of the SEPS, a Brussels think tank, and they will discuss the public debt challenge. And Todd Benjamin, the floor is now yours to introduce our key members here, our key guest speakers on the first panel. Thank you very much.
Thank you very much. It's great to be back here in Frankfurt, and Mr. Blessing so eloquently outlined the challenges facing those in monetary union and the issues of deeper political union. Before we start the panel, I just want to mention a few things to you. Before you have question cards. If you have a question for one of the panelists, please write down your question in English on this card. Put your hand above with it, and one of the hostesses will pick it up. The second thing I want to mention is that we have digi-voting. Excuse me. Of course, this is something that we had last year. It proved to be very successful. It's very lively. And I want to explain to you how it works. All right? You all have a box there, yes? Okay, good. We're halfway there. Now, what we're going to do, I'm going to ask you a practice question. Could you get the practice question up, please? There you go. You see the practice question. How many beers did you drink last night? Now, on your panel here, if you had none, and you'll vote when I tell you to vote, okay? On your panel here, if you had none, hit 1. If you had 1, hit 2. If you had 3, hit 2. I had too many beers last night. Okay. 4, cannot remember. Yeah? Let's start voting.
Let's see if they have humor. Not wine, huh? Yes, yes. Yeah. Just usually drink apple wine.
And the answer is, it's tallying it. Ah! What a sober and boring crowd. 50%. But the other 28% did well. They cannot remember, right? Maybe it's better we forget, given all that's going on right now with the fiscal crisis. And really, that's where I want to begin, okay? Because there's a lot of focus right now in Ireland They haven't announced a package. Authorities are there going through the books, but it's very clear that we are moving towards some sort of package at some point. We don't know how much it will be, but we know there are some very large problems. So I want to begin by asking all our panelists their assessment of what's going on in Ireland right now. And Daniel Gross, let me ask you straight out. Isn't this package for Ireland a de facto bailout package for the ECB? And isn't that really the hidden agenda?
Okay, you start right with an easy question. The first point is, of course, this is a bailout package for the banks in Ireland, because they are the ones who are leaking left and right. They are the ones who engaged in massive real estate lending. And we know that when you have a real estate bubble, then when it bursts, the banks take the hit. Now, these banks then had to refinance themselves over the last weeks and months, and nobody in the market would give them any money. So where do they turn to? Frankfurt, of course, which provided them with almost 100 billion of liquidity. And I can understand that the ECB must be thinking, why should we be lending these massive amounts to banks which look very fishy? We are not here to bail out banks. We are here to do our monetary policy. And that's why I presume the ECB said, okay, please get us out of this. This is not a task for the monetary authorities. This is a task for the fiscal authorities. And in that sense, I think it's actually very proper that the ECB is being bailed out. If we have redistribution, it should be done by the finance ministers. It should not be done by the central bank.
Mr. Finance Minister, if I can for this discussion, call you George. It's shorter than your last name. Okay. George, do you feel that Greece has been there? What thoughts do you have for Ireland in this process?
Well, Daniel is an analyst. I'm a politician, so I'm going to be a little bit more circumspect than he is.
Why did I think that would be the case? Yes. Okay.
Every country has its own characteristics. The case of Ireland is quite different from that of other countries. In Ireland, the problem has been the banking system, as Daniel correctly pointed out. In the case of Greece, it's been the republic, the sovereign, the fiscal situation there. I want to turn the thing around and started from the overriding objective, and the overriding objective is the integrity of the Eurozone and the Euro. And this is the lens through which we should all be looking at what's going on in Ireland. The Irish government has gone through a very tough time the last few years. They've taken some very courageous and difficult decisions. The Irish population has been subjected to some deep cuts in order to be able to keep the economy in control and the fiscal situation under control at the time when the banking crisis was slowly unraveling and showing its real magnitude. We're now at the point where decisions have to be taken, where the Irish government is carefully doing the moves that it has to do, which is to discuss with the institutions, the Commission, the ECB and the IMF, to see what kind of help, if any, is necessary. And on the basis of those discussions, it will decide whether to ask for help or not. I think we need to be a little bit careful. I understand that everybody wants to jump ahead on this, but while understanding that time is of the essence, let's also see how things go in the next few days.
That's what I want to ask you. Time is of the essence. How much time do you think the financial markets are willing to give authorities to announce a package before you would start getting nervous again? 3 days, a week?
I'm not going to speculate on a number of days.
Will you speculate, Daniel?
That's playing in the hands of the market, basically.
Yeah.
The Republic, the Irish government has no issue of financing. It has made this clear. So the issue is the financing of banks. This is where the problems lie. And therefore, it is not an issue that can take too long. Decisions will have to be taken fairly soon.
Thomas, your thoughts?
Well, I agree. I think what Ireland indeed teaches us again is that we have to jointly look at public debts, the situation of banks, and the underlying growth model. And I think the difficulty we currently see happening and occurring nearly everywhere in Europe is that we must not confine our perspective to one of those three aspects. We have seen some countries being rather stable in their public budget, but then because of the high credit amount in the private sector, they run into troubles. We have seen other countries that have basically suffered from a trade shock and then had difficulties to get to the output level which they are in need of. So I think what we really have to do, and this makes it so extremely complicated these days, is to address all the three issues at a time, meaning addressing the public deficits, stabilizing the banks, and looking for more sustainable growth, also because this, of course, is the precondition for generating the revenues which we need in order to safeguard public budgets.
Let me ask you
Can I jump in?
Yes, please, jump in. Yeah.
Just one comment. One of the interesting lessons coming out of the discussion around Ireland is that the focus that we've had until now in the Stability and Growth Pact on deficit and public debt, even when we moved it to public debt, is not enough. It is important to take into account private debt as well, because private debt has a nasty habit of being finally assumed by the governments. Therefore, we need to look and to be able to judge the situation, the economic situation, the medium-term viability of a country. Public debt needs to be put next alongside to private debt. And when you do it that way, you see some countries like ours look slightly more favorable, and some other countries which have a huge leverage of private debt be a little bit more problematic.
Daniel, you're smiling. Jump in.
Yeah, yes, this is right and wrong at the same time. It's right that private debt has a tendency to become public after every bubble. But I think what we should be thinking about is, can we actually impede this process? Can we actually stop private debt from becoming public debt?
And the answer?
And the answer is, in Ireland, we had a golden occasion to do so. In Ireland, until a couple of weeks ago, one could have said, oh, we see, the Irish banks have a problem. They have overlend. Let that be a problem of the Irish banks. They are not critical for the European banking system. 1% their combined assets. And let the creditors of the Irish banks take a hit. And that distinction, unfortunately, now is no longer possible because the Irish government has taken over a full guarantee for essentially the entire banking system. It's a little bit as if you have a ship which is sinking, and the captain then says, okay, I tie myself and the entire crew to the mast, and we sink together or we swim together.
Yes, but is this ship the Titanic, or is it something smaller? And the reason I ask that, even though Ireland's a very small part in terms of the Eurozone, you know, there's some large implications. And at the same time, you talked about private debt. You know, we have a huge housing crisis still unfolding in Ireland. And the question is, do we really know the bottom of how far that's going to impact the banks? And therefore, the size of the package they may come up with may not be enough, and then we come back to it again and again and again.
That's why, I mean, the Titanic sank because it was supposed to have 20 different separated sections, and they weren't able to close the connections between them, so the water went from one to the other and then to the next. And we don't dare to do that. We always say everybody's linked, nobody can go bankrupt, and therefore we always rush in and save everybody before we actually know what the cost will be. And I think that is this sort of crisis management, short-sighted crisis management, which we have right now, which doesn't admit to a long-term solution.
Thomas.
Yeah, well, I would slightly disagree, probably, because one of the lessons we have taken from the crisis was that agreeing to a bank going bankrupt, even if it's not so big, is quite a dangerous thing. I mean, the Lehman collapse certainly was not the whole financial crisis, but it triggered many effects which were difficult to envisage right in advance. And we know that, for instance, the British banking sector, but also the German banking sector, is rather engaged with Ireland. So I think in a situation in which markets are as nervous as they are and volatilities are as big as they are, to say, well, why wouldn't we just close down one or the other Irish bank is indeed impossible.
Yeah, I also think that Daniel is being a little bit too cavalier with systemic issues here. I would be the last one to claim that no one should ever be allowed to fail, even if it's banks. However, the decision on where to draw the line is a very, very delicate one. I think it is being drawn on the right side at the moment. We're not talking about a minor bank that could have absolutely no impact on the rest of the system. We're talking about big banks. We're talking about big banks in a small country, granted, indeed, but still.
The combined assets of the Irish bank we're talking about is, I think, less than 1% of the European banking system. Lehman had, I think, 600,000 derivatives contracts outstanding with almost every other important bank. I don't think that's the case in Ireland.
Yeah, I would agree absolutely with what you're saying. And I think, yeah, go ahead.
Take that point a little bit further. Greece is 3% of European GDP. Would you carry the same argument with allowing a sovereign to default because it's only a small percentage of the overall European GDP? I think that kind of percentage is not a guide. The systemic element can be there even if it's a small percentage of the total.
The systemic element can be there, but I think it's the task of the authorities to reduce it. And that was the task, for example, of the stress tests we had on the banks. If done properly, they should have brought us into a situation where we can allow the market mechanism to work again. If we're in a situation where we say our banks are still so fragile, our system is so fragile that nobody can go bankrupt, then we are doomed to failure, because in the end, we go from one bailout to the next.
And there's no moral hazard then. Where does moral hazard play into this? You know, if everyone knows you're not going to allow a bank to fail, then that leads to reckless behavior. You can't condone that.
Yes, but I think this is a principle-based question, and of course there has to be an effort that moral hazard would be reduced. But the question is always on timing and whether things are well prepared enough. And my sense is that many of the activities currently undertaken by the European Commission and by the ECB are done together with the regulation which is being improved in order to create a financial sector and a banking sector that would be able to digest these kind of measures. But now they are clearly not.
I want to ask the audience, it's not a digi question, but I just want to have a raise of hands here. How many of you agree with Daniel that a bank should be allowed to fail? Raise your hands. Look at that. And we have a lot of bankers in this audience, okay?
We also agree.
And how many of you would disagree?
Not the question.
Yeah.
I think this is a misleading question. Yes. We also agree that the bank should be allowed to fail. The question is under what circumstances
and now,
and whether this is the right time to do so.
Exactly.
Okay. Do you think there should be qualifications when a bank is allowed to fail? Raise your hands. How many of you don't feel there should be certain qualifications? Okay. I think the problem is that we are in a moral hazard zone right now, and I think that's a very dangerous place to be.
Well, we are in moral hazard zone, there's no question about it, and this is why you needed some intelligent policy making here. But again, let me restate, absolutely no question, banks, like other institutions, should, if they don't do their job properly, be allowed to fail. No question. Second issue of principle, keeping in mind moral hazard issues, you have to make a judgment, a policy judgment, with the broader systemic picture in mind, whether the size or the timing is correct to allow a financial institution or not. This is a classic textbook issue which has never been resolved, and we will all continue to debate whether in practice it was correct or not to allow Lehman to fail when it did and the way it did, and whether this is the time to do so in Ireland.
Let's ask this question, all right? Let's get the digi question up on contagion. Because you were saying there before, Mr. Finance Minister, that what really Ireland's all about is the interplay of the Eurozone and the Euro. And we heard Mr. Blessing also talk about how the Euro basically, has to survive. There cannot be exit strategies. let's get that question up about contagion, please. There you go. Will a rescue package for Ireland be enough to prevent further contagion? 1 is yes, 2 is no, 3 is no opinion. Vote now.
If I may, during the voting period, my sense is, will a rescue package for Ireland be a necessary condition to prevent further contagion? And then my answer would be clearly yes.
Okay. Look at this. 74% of you say that it will not be enough to prevent further contagion. Only 15% say yes, 12% have no, but the overwhelming number of people do not believe that it will prevent contagion. Daniel, surprising or not?
No, I mean, financial markets might be subject to fads and emotions, but in the medium to long run, what counts are the facts on the ground, the fundamentals. And if the fundamentals in other countries don't improve, then you can call it contagion or not, then they'll be next in line. And that's the key. And what we do for Ireland is neither here nor there. Everybody knows that at this point, after the guarantee given by the Irish government to its banks, there's little choice for the European authorities, because the option of letting just the banks fail no longer exists. And since the government doesn't look clearly insolvent yet, the European authorities have no choice but to save the Irish government for a while being.
Fundamentals are obviously the main thing we should be looking at, but fundamentals are medium term. And unfortunately, the market doesn't move by fundamentals. It moves in the short term by other considerations. Over the long term, yes, fundamentals prevail. But I think that I understand why the vast majority of the audience sees it that way. I think that it's clear that what the European leaders had in mind when they asked the creation of the European mechanism, and what we as finance ministers had in mind when we put it together, was that it should be there for any case that is any country that faces problems. It has very strict conditionality criteria, which correct medium-term imbalances, clearly. I do not know what the answer to this question is. I think a lot will depend on exactly what happens in Ireland and on what terms and how we move ahead also with the medium-term discussion of permanent mechanisms. Because I think one of the worries of the market is, and certainly it's been in our case, is that they're not convinced always that the solutions are there, they're very well thought through, and they are durable in time, and that they correct the long-term imbalances. This is why medium-term they can act the way they are.
Thomas.
Well, I basically agree. First of all, we will probably see markets focusing other countries in terms of their resilience. They will assess the situation in Portugal, certainly, and maybe with some more caution, the one in Spain. As I said, Ireland certainly is not sufficient in order to solve all the problems, but it is necessary now. And the real question will more and more get to the stage, which is, what are the underlying growth models in the weaker countries? We know that Ireland has built much of its economic success on low tax income, on low tax rates, first of all, and then low tax income, on certain production lines in the IT sector, and an inflated construction sector, and this proves to be unsustainable. So Ireland will have to turn to new business models. The same, I think, applies to your country. And that's the real question, because changing growth models and changing business models for a whole economy, this cannot be dealt with within a year or two. It takes at least 5 or 10 years. And the question is whether we will be successful enough to contain the risks on the financial sector and at the same time buy enough time to really redefine the growth agendas in Europe and in other parts of the world.
Well, talking about the region that you, of course, are involved with, can Central and Eastern European countries steer clear of the euro area sovereign debt crisis, or is there also a risk of contagion there?
Well, there is a potential risk of contagion, of course, especially if real economy would be affected in the Eurozone. Countries like Germany and Italy and France are the main export targets for many countries in Central and Eastern Europe. So there are many channels of potential contagion. But what I would very much like to point at is that nowadays Central and Eastern Europe is as diverse and differentiated in its development as Western Europe is either. You have countries that do amazingly well, like Poland or the Czech Republic, and you have countries that offer their pocket of vulnerabilities, like Hungary or Romania. So we should be careful to speak about Central and Eastern Europe as a uniform region. It's very differentiated, as it is in the west of Europe too.
What will be the knock-on effects, though, for Eastern and Central Europe, those who plan to join, the EU? Will it delay it? What do you think the ramifications will be? Just very briefly. Yeah.
Well, first of all, I think it was a very good decision to make Estonia get member of the Eurozone, because it just shows that there is not a closed shop by now. But in effect, I do think that for domestic reasons and because of needs of stabilizing the euro area, we will see some time delays in further accessions.
Okay. I want to ask you a very straightforward question, Daniel. 10 years from now, will monetary union still exist as we know it?
Oh, yes. I think the political commitment is there. None of the large countries will even consider leaving or breaking up the Eurozone. The key question is, what kind of Eurozone? Do we still have the old Maastricht type thing with an independent central bank and no fiscal redistribution? That would be one way to go, but then probably we'll have to have some restructuring of some debt somewhere. Or do we go in the opposite direction? We guarantee everybody's debt. Perhaps implicitly the ECB loses its independence, becomes a fiscal agent, and via that route we have some redistribution. This is the bifurcation which I see starting now. Still uncertain which way we are going, but I think the rails are being set in these days.
Let's ask the audience here. We have a Digi question on monetary union. Can we bring that up, please? Will the European Monetary Union survive the coming 10 years? 1 is yes, 2 is no, 3 is no opinion. Start voting now. And the answer is 88% say yes, 11% say no, 3 or just 1% have no opinion. Mr. Finance Minister, you're smiling somewhat. Why?
I was trying to guess the answer, and I came close to it, I think. I have no doubt in my mind that the monetary union will survive. I think that the bifurcation that Daniel talked about is a correct, stylized way to look at things. However, I think that between the 2 tracks that he outlined, there's also a combination of the 2. Clearly, I think the crisis has taught us that the institutional infrastructure that we had created had some elements missing. We knew that. Theoretically, we had to find it out in practice. Clearly, this requires a number of corrective elements. They have to do with fiscal transfers. They have to do with a permanent mechanism with very strong conditionality. We have now the big discussion of how you deal with moral hazard without creating more trouble with some of the measures that are being discussed. So I think at the end of the day, we will find the right tools. It's a discussion which has started, and I'm absolutely positive we'll conclude
Was
in a way.
was Angela Merkel right to bring up the issue post-2013? Simple question.
Simple question. Not quite. It is a very difficult issue. Let's look at what the real situation is. The real situation is that you do have, when you set up a permanent mechanism, you do have moral hazard issues which you have to address. Point number one. Point number two, in principle, some form of private sector participation makes perfect sense. Point number three, in practice, we have to be very careful, because how you raise the issue, even if you raise it for post-2013-14, has a direct implication to the now. And we've seen this, and I've heard the ECB have a very clear position on this. So it's an ongoing discussion. We'll see where it goes, and as you can see, I'm being very careful answering.
You're being very careful. Let me try that again. Was Angela Merkel right to raise the issue?
I don't think it's an answer that can get a very definitive. I don't think it's a question that can get a very definitive answer in one way or another. I think our position is very clear. We expressed it as government. We don't think that this is the right moment to put it in this way. We think that a discussion along those lines has an implication on spreads and costs of financing in the present. And I think if you open such a door in the future, people will discount it, bring it back here, and say, okay, well, we know where this is going.
But on the other hand, obviously, she has political considerations here at home. And she may have raised it and did raise it because of those issues. But on the other hand, you had the euro when it was born. You did have the Stability and Growth Pact, of course, which Mr. Blessing referred to. But the reality was there was no true plan B.
No, but
there was no true plan B. So isn't it better prepare, get it out there, and have a true plan B than to be in the position you're in now?
The real question is, what kind of mechanism do you create to avoid moral hazard issues? And you can think of ex ante rather than ex post. I know that this is not perhaps a very popular discussion in this group, but the ongoing discussion about bank levies and financial activity taxes with a global nature may be a better alternative to ex post, a corrective mechanism ex post, which imposes costs on bondholders, which they will discount, bring to the now, and increase the yields.
Thomas, you want to say something, and Dan, you want to say something?
Yes, I'm afraid we get a bit technical. And my sense is the 88% on the positive on the question you have asked reflects a bit a distinction between the elites in Europe and what real people in the street do think. And I very much agree to what Martin Blessing has said in his opening remarks. I also hope and trust that in 10 years from now, the monetary union still will exist. But we will need to have a political debate, not only a technocratic one, what this means. And it really has to imply a political choice of giving up some sovereign rights. Otherwise, it will not work. A certain amount of transfer is unavoidable in a monetary union. And these are the kind of questions which you cannot just discuss here among us, bankers and politicians, and you cannot just constrain the discussion to mechanisms of bailout and so forth, as important as they may be. But the monetary union, I think, needs much more of a political, open debate than it has had up to now.
Daniel.
I would start from the same considerations as my co-panelists here, but I would come to the opposite conclusion, at least his conclusions. First of all, to help my neighbor here, private sector bailing in is something you don't talk about, you do. But you certainly don't have ongoing discussions about. That's the worst thing you can have. You have ongoing discussions, then you just have high spreads, and in the end you bail them out anyway, and you're in the worst of all worlds. So I don't think that's the way to do it, to go ahead. But this is very important, what was just mentioned, the distinction between the elites and the population. I'm all with you when you're saying we should have an open-ended debate about saying, do we want to have fiscal transfers in the euro area, not EU, in the euro area, as a part of monetary union? Discussion which we had a little bit. And I have my opinion on that, okay, but a discussion is necessary. That is different from what is actually happening on the ground. What is happening on the ground is that the elites take very important decisions without asking the people.
Exactly.
For example, the Irish government guaranteeing the banks. This was done without asking the Irish people. That was an elite consensus in Ireland and in the financial elite throughout Europe, which then means that the other elites have no choice but to say, okay, Ireland, you have to be bailed out, whatever the population in this country or other countries might think.
It's very interesting that you... go ahead.
I'm not sure where Daniel is going. I mean, you have democratically elected governments which have to deal with crisis. They take decisions, and they are judged by their decisions every X years. This is how a democratic system works. We take the risk and political responsibility of taking decisions. We don't put everything to a referendum every 3 months. That would be absolutely catastrophic. And then we're judged by our populations. And I also don't understand your point about discussion. We are a monetary union with governance issues, but we take our decisions through politically decided fora where different countries will come to the table with different positions, and we have to thrash these out. We have to make compromises, as we often do. I mean, the EU is built on compromises, but that's how we moved along, and we moved along very well these years.
That's what I meant. I didn't say you have to have a referendum and everything else. But as I said, let's take Ireland as this one big decision which was taken. The Irish Parliament, the Irish public wasn't informed. This was taken without, if you want, any democratic quote-unquote participation. EU country is quite different. You are going to Parliament with your budget. You have intense discussions about cutting in pensions. It's a very democratic process. And within Europe, the Greek package was widely discussed and in the end agreed. And it went through national parliaments. But here, there have been taken, some elite decisions have been taken with huge implications for the country and for the entire EU, but without anybody knowing before.
The decision, I find myself in a difficult position of sort of defending another government, but the decisions that you're talking about are embedded in the budget, and the budget will be voted in Parliament. And if the Parliament votes down the budget, there will be an election. Simple as that.
Talking about budgets, let me just jump in here a second. Of course, you announced a new budget yesterday. Your game plan is to get down to, next year's 7.4% deficit of GDP. Of course, it was much higher, in the previous year. What makes you believe that you will be able to accomplish this? And I realize you're going to raise VAT and cut further government waste and do some other things. But what makes you believe that you will be able to do this?
The short answer is our track record this year. This year, we reduced the deficit by 6 percentage points of GDP. This has never been done before. 2008, deficit 9.4% of GDP under the previous government. 2009, we came to power at the end of 2009, deficit 15.4, it went up 6 points. 2010, 9.4, we have reduced it 6 percentage points. Our track record this year makes me, I think, more credible than I was 6 months ago, that indeed in 2011, with specific measures which we have taken, which are embedded in the budget, and which address the real problems in the Greek fiscal situation, which is the bloated public sector, the loss-making public enterprises, the waste in the health system. These are the measures that we are attacking, and that's how we think that we can reduce the deficit by 5 billion euro from 9.4 to 7.4% of GDP.
I want to ask the audience a couple of questions about your country here. Bring up the first one on Greece, please. Straight out question. You're laughing here, but some people question whether you will still be a member of the Eurozone in 10 years' time or whether we'll have a different structure, which Daniel alluded to. So, will Greece still be a member of the Eurozone in 10 years' time? He's in the firing line here. 1, yes. 2, no. 3, no opinion. Start voting now.
Be very careful.
We'll give you the bulletproof jacket in a second.
Yeah.
Yeah, exactly.
I'm used to it by
Yeah,
now.
exactly. And the answer is, well, 26% of you say no. 70% say yes. 4% have no opinion. Now, let me ask a follow-up question to this. Bring up Digi question number 2 on Greece, please. Will Greece fully meet its financial obligations vis-a-vis investors in the coming 10 years? Different question. Now, 1 yes, 2 no, 3 no opinion. Start voting now.
I'm sorry, I didn't know.
Sorry?
This is tough for you. So
This is a good one.
perhaps you tried it beforehand.
Thank you, sir.
Have you had
No,
it
it's
before?
okay. Maybe.
And the answer is 67% say no. Mr. Finance Minister, I put it to you, you got a big credibility problem. You got a major credibility problem here. 67% say no.
Well, let me say the following. Congratulations on the correct answer to the first question. Unfortunately, you didn't quite get it right on the second question, but we'll give you another chance. Let me put it this way. I understand the concern, and I can see it, and I would be actually relieved, of course, but almost surprised if we got the reverse result, and that's for a very simple reason. What you have in front of you is a track record of only 6 months. In those 6 months, I think we did much more than anyone would have expected us to do. But there's a long road ahead of us. And if you look at the math, people look at the debt to GDP ratio over the next years. They see that we're fully funded until 2012. They wonder, well, what's going to happen from 2013 on? They see a hump in our debt to GDP. They wonder whether we can make that. The answer to this question is threefold. One, sustainable primary surpluses, which we will start having from 2012. That means sticking to the fiscal consolidation. Two is the growth story, and here I join the previous discussion. It's all about growth at the end of the day. A 1 percentage point up in growth or 1 percentage down point in growth makes all the difference in the world. And I think there we are beginning to have a convincing story, but it's a different story than the growth story we had in the last 10 years.
What's your business model for growth? Let me go back to Thomas's question.
Let me also give you the third one, and then I'll be happy to. And the third is, how do we handle the hump? And the hump is 2014 and 2015. There is a number of ideas on the table. The IMF has suggested lengthening of maturities of the EU IMF loan. At the moment, we're simply sticking to doing the program right. But these are legitimate questions, and therefore I'm not tremendously surprised. But I think that we will reassure, because some of the people around the room are also lenders. So we need to be reassured.
But in terms of what is your model for growth? You have a model for austerity. You know, your economy fell by 4.3% last year. It's going to fall by some 3%, or 4.2% this year, 3% next year. You know, it's one thing to have an austerity plan, but ultimately you have to have growth and a growth plan. What is your plan for growth?
There's traditional sectors in which we have a clear comparative advantage. Tourism is one, shipping is one. We lead the world in shipping. We're one of the biggest tourist destinations. These are two sectors that are and continue to be important. We have a big push on green energy, on clean technology, on linking the agriculture sector with tourism and cultural issues. There are tremendous comparative advantages that this country has or can build. I simply do not believe, and I object strongly to anyone saying that a country must find one sector from which all the growth can come. This is completely wrong. Growth needs three things. One, it needs confidence, because confidence opens up markets, brings investment, and therefore growth. That's one thing which we will get through the fiscal consolidation effort. Secondly, growth needs a better business environment, therefore structural changes. If you look at all the rankings in doing business, etc., Greece is a laggard. So if what we're doing is correct and the program we've put in place and the structural efforts that we're doing are tremendous at the moment, in 2 or 3 years' time, the potential growth rate of Greece will go up simply because of the structural reforms we're doing. And then the third is which sectors we're focusing on, and I gave some examples.
You saw that skepticism among our audience here, 67% in terms of meeting your obligations. If you have an extension of your payments, isn't that in fact a selective default?
No. An extension, if it comes, because we haven't put that on the table, where again, I repeat, we're simply sticking to doing the program right. An extension, if it comes, will be a recognition of work well done and the fact that we're advancing. If it comes, it should come as a reward of what has been done, not as a substitute for what could not be done.
Well, the speculation is you may use this budget to try and convince your EU partners and others to have an extension of payments and try for that next year.
We're using this budget to reduce the deficit from 9.4 to 7.4, and we're accompanying it with all the structural reforms which are necessary for the country.
Not to get too bogged down here, Daniel, but your thoughts, and are these numbers credible that he's throwing out here? Obviously, there's a lot of skepticism among our audience.
I think there's a credibility problem here which cannot be resolved because markets would need 2 years of actual performance. So why not just acknowledge that and do a very simple thing? You make a deal with your creditors. You say, okay, we agree on an extension of deadlines, perhaps somewhat lower interest rates, but the creditors get GDP warrants. If the economy of Greece grows as much as you and everybody else hopes, they get their full money back. If it doesn't, then probably Greece cannot pay fully anyway. So I think that reflects reality. If the economy of the country doesn't work, then the government cannot really squeeze out too much of the country. So just let have a sort of debt equity swap, and then I think both sides can relax much more. Don't accuse each other. You're not doing enough. You're not credible. We are credible, and then we can just sit and wait whether the growth comes. If it comes, fine.
Mr. Finance Minister, what do you think of that?
That's elegant, but I don't think it's right. It's
Elegant,
elegant
but not
academically,
right.
and it makes sense when you first think about it. I think again, I see and I understand the skepticism. I think that the skepticism simply needs time, and it needs not just the track record, but any discussions, which perhaps in 2011 is a good time to take them, on how you handle the specificities of the 2 years with the debt to GDP ratio being difficult to manage. If you open now a discussion, which includes debt restructuring and haircuts, then I think people underestimate the damage that this could have. The damage it would have to the Greek economy, to the Greek banking system, and the broader collateral damage to the rest of Europe. It would send the absolutely wrong signal. It would not solve anything, and it would create damage to other peripheral countries. Because if you go through a restructuring process, because that's in effect what Daniel is saying, he's just putting it in a more complicated way. If you open that discussion, what happens to other peripheral countries? What happens to the demand for their sovereign debt?
Thomas, your thoughts?
Well, I think, first of all, that there is no real answer to the question where exactly the country will stay in 10 years, because it has an element of behavior of a whole nation which is very, very difficult to predict. What we should be sure about is don't never ever extrapolate from a situation in which a country is in a crisis. 10 years ago, probably nobody would have done any bet on Russia, and Russia recovered very well since the late 90s. Had we spoken about the situation in East Asia 10 years ago, probably very many people would have said they are in a mess and it will be extremely difficult for them to get out of it. So I think it's very difficult to extrapolate in the negative. It's also, unfortunately, difficult to extrapolate in the positive.
But
because it's very difficult for a government that is doing the right thing to know exactly in what kind of mood your nation will be, let's say, in 6 or 7 or 8 years from now. So I think The only thing one can do is to do the right things now, to create as much confidence as one can, indeed try to bring the country on a successful route, but whether it really will happen, we unfortunately don't really know.
But the big unknown also is, populations. Someone last night said to me, is the euro really worth straining democracies? And the big question, and a couple of questions have come in, one along these lines, for how long will the populations in Greece and Ireland go through deep pain, just repay creditors in full? And then there was another one specifically for you, Daniel, that very early in this debate you suggested a European Monetary Fund. Now politicians will rush through to build a transfer union. Aren't you afraid that the electorate does not support this project?
Can I butt in for this just before Daniel does? Let's not underestimate European populations here. We had an election a few days ago in Greece. This was after a year of the harshest possible measures. We cut public sector wages by 15%. We cut pensions by 10%, increased VAT 4%, increased excise taxes 30%. And a year after that, after this very tough period, we went to elections and the government won. Why? Simply because people understand the need for change. They need to have a prospect. They need to know that at the end of the day, you're getting out of the tunnel and they're getting back for all the pain. And you need to have a basic sense of social justice when you're doing it. If you convince them, I'm not saying they gave us carte blanche to go ahead and do whatever we want. It was a cautionary, sure, we understand that what you're doing is necessary, go ahead, but be very careful. But to think that populations somehow have a Pavlovian response is I think, doing grave injustice. You need to explain, you need to ask them for their contribution, their help, you need to do it in a way that is basically just and not rely on hitting particular segments and leaving out completely others. This is why, for example, the issue of tax havens, I think, is very, very important when you're discussing this at the European level, because people get the sense that you need to address these broader issues. But to somehow think that European populations will have an instinctive rejection of all this, I think is wrong.
Why should the populations of Germany have to, in a sense, be the bailout buckets for countries like yours?
I object very strongly to this, to the way that you framed the question, of course, in a provocative way, in a very, I understand completely why you did it. And I think we should make a very clear separation between some of the most sensationalist, populist attitudes that unfortunately exist in all countries, and to a very basic understanding that at the end of the day we're in this boat together, that Germany also needs export markets, that peripheral countries have been buying German products and have been one of the main customers of Germany, that this is a common market where there's give and take. And as long as every country plays by the same rules, these kind of arguments and these kind of populist attitudes have no place in the European Union. And when we... And when a country stays out of line, then it has to be brought in to the same... but I think that any politician that heeds this kind of argument is really paying a disservice to the country. And I'm very happy to say that the German government does not do that at the moment, and it is not heeding those voices.
Thomas.
Well, I agree with what you say, but I would supplement it with saying that you say that there is no place for it. I would say there should be no place, but there can be place for it if it is not taken up through strong leadership. So it's nothing which will happen by itself. We will see these kind of moves and inclinations, especially if the very good economic situation of Germany of these days would falter again, which is not inconceivable. So what I would say, don't trust into any automaticities. It's all about political leadership, and either it takes place, then I think we have a serious chance, or it does not, then we may see these kind of populist feelings spreading.
Do you expect certain Eurozone countries, another question here, to become dependent upon surplus countries like China? China, you said they'd buy your debt.
Yes, and this was a very welcome announcement. They said they will not sell and even expand what they're buying, and they are investing heavily in Europe, and we are very happy that they're using Greece as a logistics and transport center for the broader region with their investments in Piraeus. Look, I think we have to get used to the fact that the game is changing. It's changing very fast with economies such as the Chinese economy having a much bigger presence than we are used to in the past. And I think there are discussions around that, around currencies, which will happen at the same time. But I'm not one of those that see this as a threat. I see that this is a positive-sum game if we play it by the right rules.
Dan, I want to go back to the earlier question that was asked. Yeah.
I still think the European Monetary Fund would be a good idea. But what we have right now is basically funding without a fund. We have potential funding hanging in the air there, the EFSF, but I think it has the wrong destination. You see, the funding from the EFSF is meant only to bail out countries. My view that we developed together with Thomas Meyer, who's actually sitting here, was that the key aim of a European Monetary Fund should not be to be an additional bailout way, but to be there so that one can say no. So if the European leaders decide that the country does not really, that doesn't make sense to bail out private creditors fully, we should have some sort of orderly insolvency, and then the funding would just be there to calm down financial markets. Everybody says, oh no, a sovereign insolvency or even restructuring or even rescheduling, unthinkable because financial markets go in a tailspin. But that's why I'm saying, if that is always the alternative, we tell our people, Tina, there's no alternative, we got to bail out country 1, 2, 3, 4, 5, 6. And then after a while, they'll say, stop, this can't be true. And that's why I think we have to create an alternative. And that is why I think we need something like this fund, and we could actually use the EFSF, and just we need to change one line. We would have to say the EFSF cannot be used only to bail out countries, but it could also be used to calm down financial markets in case a sovereign restructuring, rescheduling, whatever, becomes unavoidable. And that way we could have a European Monetary Fund.
One of the things Mr. Blessing pointed out in his opening remarks was this debate that we're going to have about deeper political union. That, of course, raises the debate about fiscal union. And can you really have monetary union without fiscal union? Before you answer that, all of you, I want to bring up another Digi question, and this is on bonds. Bring up the Digi question, please. There you go. Will a common EU bond replace national bond issuances to a large degree within the coming 10 years? 1 is yes, 2 is no, 3 is no opinion. Start voting now.
Will or should? Will or should?
Well, let's just not sure. It's interesting. Yeah, let's see. I'm not sure what the answer is.
And the answer is 31% say yes, 64% say no. That's slightly less than the question about Greece meeting its obligations. 6% have no opinion.
Could I ask you to put that question again and replace the word will with should? See what kind of answer.
Okay, well, you know, the technology won't allow us to, so we'll do it sort of by a raise of hands, okay? You ask the question. Go ahead. Ask the question, Mr. Finance Minister. Yeah.
Should a common EU bond replace national bond issuances or complement national bond issuances to a large degree within the coming 10 years?
Oh, that's a different question.
Yes.
How many of you feel that it should? Raise your hands. How many of you feel it should not? It still looks like it's a no answer.
But it's a sizable minority.
Well, no, but it's still a no answer. Okay, your reaction. Yeah.
I would side with the sizable minority here, saying that I think that the debate is not advancing if you asked the question about if you can have a monetary union without having a true fiscal union.
Yes.
And I think the real answer is no, you cannot. And to the extent that you have a missing leg here in the institutional architecture, and we knew this, you have to find ways of doing it. And having an EU bond, a Euro bond, complement, not necessarily replace, but complement and be there as an instrument, is, I think, one very good direction in helping that in that way.
Thomas. Yeah.
Well, I would take up your wording of you should find ways. And this, I think, really points to what kind of a debate will we have on this. And I really think that currently we are in the danger of having too many of these kind of expert debates on a European restructuring or creating a fund or European bonds, all very important questions. But in the end, the question has to be put to people: what kind of joint actions and joint responsibilities are we wishing to take? And because you spoke about fiscal rules, I mean, my experience from the European Union has been, at least up to the crisis, that if there's one issue on which there's no agreement at all within the European Union, then it's on taxes. And there's always an end of chairmanship meeting of the ECOFIN, mostly in December, on taxes, and it produces literally nothing. And now we will see whether, for instance, if Christine Lagarde would be here, we certainly would be very interested to hear what President Sarkozy's announcement that the French fiscal regime would be approached to the German one would in substance mean. That would be a very, very major step, if not only France, but other countries too, and certainly not just adhering to a German model. But if we would get slightly and step by step into more of a common European tax system, that would make a lot of a difference. But again, an extremely political debate and not just one for experts.
Daniel, you want to jump in here?
Yeah. First, a quick reaction here. Actually, when I hear about the French plans to imitate the German tax system, I get really worried. Because then you get also not only distortion of the German tax system, but also get the German tax revenues, right? And you have French spending. The two don't go together. I think if in fiscal policy, you always have to think first about how much you spend. That's what you have to finance later. So if she had started saying, okay, we will imitate the Germans in terms of our expenditure, then I will be with you. But just getting German tax revenue with French spending, I think that's. But I think comes back to what we said earlier. Will we have EMU? Yes. What kind of EMU? And now we had a treaty, but a treaty not in the sense of the formal treaty with paragraphs in there, but we had a clear understanding what kind of EMU we would have. We would have a monetary union, but no fiscal union. And the 125 in the article, the so-called no bailout clause, was actually not needed. It states the obvious, right? No country guarantees the debts of another country. No need to write that in the treaty because it's legally superfluous. But why was it so important? Just to state the obvious, sometimes it's important. We shouldn't have a transfer union. If we want to go to a transfer union, then we read nearly a new treaty, but in the sense of really a new understanding. In Germany, you would say Geschäftsgrundlage. It changes the entire way we think about it. And this is not a small adjunct transfer union, a little bit more fiscal transfers here and there. No, this means tax systems, but I think tax systems are not even half the story. Pension systems, childcare, health system. Can you imagine a qualified majority vote in the European Council on the retirement age for French workers, Greek workers, Spanish, German, on how much pensions can increase in Ireland, Sweden, whatever? I think it is impossible even to consider that, perhaps not forever, never, but for the foreseeable future, this is just not possible. And as long as we don't have that, I don't think we can have a fiscal transfer union. We can't have a little bit of it. You can't be a little bit pregnant. Either you have it in principle or you don't.
I think Daniel is absolutely right that it's a political discussion that is, I think, only now opening up. I do not know where this will go. I do not know, and I am open to be surprised by how it, and I do recognize that the climate at the moment is not the best to go in the direction that I would have liked it to be, which is more European federalism. However, I think we have, as a union and as a collection of sovereign states, 20 years ago we would not have thought we would be here today. Now, on the back of a crisis, we're opening up a discussion which was logical to open at some point, once you see the limits of what you have created. And we're making some first small steps, even though it is true we're not ready to make the biggest steps and really open up the discussion that Daniel is opening. But the fact that you need a major discussion and major decision does not mean that you cannot advance in a step-by-step fashion to at least solve some of the problems short-term.
You all agree, I mean, and everyone seems to agree that 10 years from now we'll still have monetary union. There may be some differences in it, but generally that there will be a monetary union. You know, the big challenge for much of Europe is growth, all right? Ultimately, you have to get growth, otherwise we're going to continually come back to these problems. And there are huge challenges for Europe. I'm just back from Shanghai, and, you know, it is booming there. You know, I want to ask the audience one last question here. If you could bring up the last Digi question, please, on growth. The prospects for Eurozone growth over the next 5 years. 1, optimistic. 2, not optimistic. 3, no opinion.
It's easy to guess. It's easy to guess.
Not so easy. Here in Germany?
Yeah, it's true.
And the answer is?
But still, I think it's going to be 2.
Whoa. Divided. Divided. Yeah. Divided. Isn't that amazing? Yeah. Yeah.
I lost a wager here with Daniel. I thought that the audience would be more optimistic than this. I forgot that we are in a country whose growth pattern at the moment is quite good. I think that one can be optimistic under the right scenario. I mean, optimism simply reflects a decision that we're going to do the right things, which is not everywhere there. And this is why I thought that the balance would be more on the not optimistic side. But it's a result I'm quite happy about.
But I think that it's a very tough question. Look, people are not people are divided here on the prospects for growth. You know, but given the large deficits and level of debt, and I'm sure you'll say they're coming down, but in the coming years, the member states will have to face a fundamental trade-off between maintaining welfare state commitments, ensuring fiscal consolidation, and allowing innovation in favor of the green economy. Is this possible? How can it be done? Thomas.
Well, I wouldn't probably call it a trade-off because I see many connections. But what I do see is that for, I think, something like 20 years now, we had a relatively sluggish growth. And I don't really see where it should come from that this right now would change. By the way, the comparison to the United States normally is misleading because they just look at the United States as a whole with its growing population and not on a per capita basis. And then you have growth in the United States and within the European Union nearly at the same number. So I think what it's really about is how to redefine growth in the developed world and how to make growth more sustainable in the developed world. One answer is certainly that the developed world has to produce things which are in demand in the emerging markets, but this is only part of the answer. The other part is what do we do in order to invest into long-term growth engines like education and skill, like intelligent grids and these kind of things. But all in all, I don't know exactly how optimistic and not optimistic is defined. My own definition is there's a very high probability that in the average we will not be beyond 1.5%.
Would you agree with that, Daniel?
Yeah, I think he's exactly right. On a per capita basis, There's very little difference between the EU and the US. Actually, what few people realize, if you actually take into account the working age population, right, the only guys who can produce stuff, there Europe has done slightly better than the US. And the big country of the G3, which has done the best over the last 10 years, GDP per working age, is actually Japan. So when people talk about Japan as a lost decade and so on, it's basically demographics. And the demographics in Europe are getting worse, on average. And therefore, I think it's quite easy to say that over the next 10 years, the growth rate will slowly come down. Doesn't mean disaster, just around the 1.5. What I really, however, would advise is that politicians back off grandiose promises. Europe 2020. Smart, inclusive, and whatever growth.
We've been there before.
Right? We have been there before.
Right. Okay. George.
I have never thought that our social model is a drag on growth. I have thought it needs some fixing, there's no question about it, and I think a lot of fixing is happening at the moment. I do, however, I take Daniel's point, but I think at the same time, we need to keep talking about the bigger picture, and you sometimes need to crystallize where you want to go with even sometimes grandiose sounding things. They may not work necessarily always, but if you do not seriously take into consideration the need to invest in the future, in skills education, in new technologies, in green energy, and sometimes some of these investments have to do at the European level, and therefore act as a counterpart to the fiscal retrenchment at the national level. If you don't do that, then you don't give European populations a sense of where you want to go.
If you and I were all having this discussion 4 years from now, will we still be in the same crisis mode? Daniel?
If we continue the way we are going, yes. Because the way we're doing right now is we are just shifting the problem from one way to another. It is as if you were walking on water lilies. You put your foot down here, and it comes up somewhere else. Put your foot down there. And the amount of debt in the entire euro area is not being reduced. Irish mortgage holders to Irish banks to the Irish government to the other European governments, and then who knows to the ECB. There's no solution, no end in that. If we just continue to do that, we have to reduce somehow the debt levels. If we don't do that, we'll be here in the same place in 4 years from now.
And the ambassador of Ireland is in the audience. He really wanted to make a couple points. One, in terms of Ireland, he said we have very good medium-term economic prospects. Exports are up 10% in Q3. And his second point was a government cannot allow its banks to fail. And 3, we have the capacity to deal with our current challenges. Okay. Thomas, 4 years from now, could we be still having the same debate that we're having today on the crisis?
We will not be in the same crisis mode. But I'm not sure that we will be out of the crisis. It might be that we are in a kind of different crisis again. So things would change too quickly to just be in the same mode in 4 years from now.
Mr. Finance
You
Minister.
know, Europe is complicated. We're all different. We start from different starting points. Our populations have different mindsets. But we have a remarkable capacity, not just to muddle through, but to find solutions. So I think that in 4 years from now, we may have another crisis. We'll be over this one. But I sincerely believe in our capacity to take the right decisions between now and then.
Well, I look forward to seeing you all again in these chairs with another crisis. I want to thank our audience for their great participation and questions. Let's have a very